Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk here on this Monday, July 11th. Great to have you with us once again. Thanks for making us part of your day. I am your host, Jesse Allen, and thank you again for joining us here as we come out of the long holiday weekend. We have plenty to discuss the market trade here today, and you can find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com. That is where you could find us, all of our social media feeds, and all of our streaming sources, our radio affiliates, and much more. Well, as we take a look at the market trade today, one day ahead of the July WASDE report, we see quarter beans doing their best to maybe add a little more weather premium back into the market, while wheat was down rather sharply. And we saw a mixed trade with cattle moving higher in the protein sector. Here to join us today to talk about the markets, let's say good afternoon to our good friend John Heinberg with Total Farm Marketing. John, good afternoon to you, sir. And another interesting day in the markets here to start the week. Overall, like I mentioned, maybe a little weather premium back at quarter beans, and wheat kind of just doing wheat things is probably the best way to put it. Overall, before we break things down individually, what were your thoughts today?
Well, you start the day and look at some of the outside markets. If it wasn't for that weather premium in that corn and soybean market, I think it'd been a little bit of a concerning day. You had the dollar surging to new 20-year highs. You got crude oil down $2+ a barrel. You got the stock market down a couple hundred points. You go look at some of the commodity space. At that time, cattle was lower, hogs are mixed, cotton was down fairly strong. Wheat market already rolled over kind of in that time frame. It was just kind of corn and soybeans that was bucking the trend. So, I said that to a couple of my colleagues about midway through the morning, like, this could have been a kind of a tough Monday, given some of the recession fears and risk off type trade that looked like the market was building. So maybe we're a little grateful we got that weather premium, at least on the overnight session. Obviously, it didn't hold, at least in terms of some of these markets overall. That move in wheat was very concerning, being trading 80 cents plus off the highs for the day. So that was just a bit of a wet blanket. I think that really came into play on the grain markets in general, is just some of that action in the wheat market.
Well, I look at quarter beans specifically, and we mentioned how that weather premium it kind of faded as we went through the day. We still held some green numbers there. I have to wonder if maybe some of those rains that came through Iowa, Nebraska, South Dakota this morning, if traders looked at that and said, "Oh, they're getting rain in the heart of the Western Corn Belt, so let's take a little bit of this weather premium out," even though that forecast for this week is still looking rather hot and dry, maybe a little concerning, John.
It is over the long range. I think that may have been some of the first part of the premium that came off, was the fact that you turn on the radar and you see a big old batch of rain across through the portions of Iowa into northern Illinois. We'll see what the coverage was. I did talk to one client that looked like he was in a lot of rain. He said he got 500 of an inch, so it really didn't quite come together for him. Then about the 10:30 window, we started getting those models again for the weather, and they did push a little more moisture into the Friday night into Saturday type forecast modes. We'll have to watch. They call it a ridge runner. In other words, we've got this ridge forming, and a stronger storm coming over the top of that ridge could possibly trigger in some thunderstorms, again, eastern Nebraska down into Iowa, southern Minnesota, Wisconsin, northern Illinois, and that type of a region. So that's something we'll have to kind of see if materializes. I think that was the other factor that brought the next little piece of selling into the markets today. And then obviously we do have a USDA report tomorrow. We've had a nice run. It turned into a good window to take a little money to the sidelines here, considering how far we've moved off of those lows from just last week.
Yeah, we moved off those lows after that big run down, and then last couple sessions we've added some back in here. To me, on the corn and soybean side, especially heading into a report tomorrow, it feels like this would be a good opportunity to maybe get some puts in place, do some things with your marketing strategy, just to try to protect yourself in case we end up losing steam and move back to the downside, John.
And that could have been a factor in the corn market as well today. We got back to the 650 level on the overnight session, peaking December out at 658, pretty much right off those opens on the Sunday night session. So that might probably triggered some selling, considering we were at 570 last week on the lows, getting back to to that 650 level and picking up that 80 cents sounds pretty dang popular in terms of getting some sales caught up. And that's what I was telling some of my clients too. I mean, the charts are still more on the negative side here. We've got that, double tops in this chart, those two separate highs back there in May, as well as back there in June, and the hard sell off going into the 4th of July. Yeah, we've rebounded nicely. We held an area I thought we could hold at 570. Now we're kind of fight this 650 area. If we can get back above it, if the weather forecasts do materialize and stay on the drier side, maybe we got a chance to run back up and retest those highs, or at least the top of that range up there. But I'm going to treat this defensive at this stage until we truly have something come together on the weather front to change the picture. And I think that's why producers need to focus on their marketing side here as well too. You get some run, you reward it with sales, you pick up some put strategies, making sure you build that defense, because that low last week was probably not the low. We got a fall low that may be coming. We'll see how that comes into play down the road. But at least you got some targets now down there, to protect, especially too with that gap we put in the charts this morning. Those things like to get filled. I mean, we'll do it tomorrow quickly before the report on the overnight session. We'll see. We'll see what the crop ratings give us today. Maybe that gives us a little bit of news. So we'll have to, watch. I would say they're not going to do a whole lot given the moisture we got last week. But again, take advantage of this opportunity when you get some value. Again, put some sales on the books or put some defense in. I'd rather see the market rally higher and you still have some bushels to work with.
I think another thing to consider as well into the marketing plan right now is the fact that, cash basis has held relatively solid despite the big market sell-off we saw. Now coming back, futures has kind of been all over the board. Basis is held relatively steady, John.
That's some of the disconnect that maybe we're seeing between the futures market and the cash market at this time frame. And yeah, you hear that in a lot of different areas. A strong basis level supporting these prices, moving well now into the next delivery period. And again, there's opportunities out there. That just tells me one of two things going on. Number one, USDA is off on those numbers. That in terms of where the storage is, they said 46% of the grain stored up was on farms here. That was even higher than last year. I found that a little surprising given the strength in price, but again, maybe producers had some more money and felt like hanging on to a little bit more. But at the same time, when you start talking to guys, they don't know where the corn is. They don't have it. The elevators are telling us that the corn is not out there, and that's what we're seeing happen in the cash market. I wouldn't be surprised as way down the road, but I'm going to throw this out there that we get to September and that grain stocks report comes and we get an adjustment back to June and we're off by 100 million bushels somewhere, and we see that get reflected in the price then. It's happened before. It'll gladly happen again just because we know it does. But again, that's one of the things that's out there. It's one of the things that keeps you a little optimistic, at least that September contract and that spread between July to September. There will be a window when the elevators say, okay, new crop corn's coming. We got enough to get us through, and you're going to see that basis fall apart very quickly. And again, that's another reason to make sure you stay aggressive on your sales, get that defense built in, because when that window comes, we could see this thing roll over very fast as the speculators run to the sidelines one more time.
John, let's talk the wheat market. I was doing my best to try and figure out what was going on there today. We've alluded to it a little bit. Probably US dollar. I mean, new highs there again, up around that 108 mark. I would have to think that's a considerable weight, just kind of pricing us out of the world market here, the US. You throw in there too, maybe I've heard some ideas USDA could raise all wheat production on the report tomorrow, or maybe, better spring wheat yields. We've seen some rain help there. So, I mean, it feels like probably dollar, but maybe some other factors at play in the wheat market today. What do you think?
The market had a pretty big recovery off those lows last week, and so we're probably seeing some profit taking. That dollar was probably the main focus on it. You go look at export sales last week on Friday for all three grains, but even the wheat side again continues just to be lacking. Export shipments, nothing to write home about today. That concern regarding demand is there. We are expecting to see carryout numbers come up, maybe on some production, but what's USDA doing on the demand side? As much as we want to see the world come to our door for wheat, they just aren't doing it right now. Add in that strong Russian crop, some of the issues that they're doing in terms of their, export taxes and the value it's putting on the wheat too, just turned into a bit of a perfect storm, triggering that wheat market to really tumble today. And then throw some hedge pressure in there as well, as producers obviously are still, starting to bring that wheat harvest up more to the north. Now we're starting to see some of those early spring wheat results come in, at least the stuff planted on the eastern side of the Corn Belt, and things are still there. So when bushels are there, harvest is there. We've got maybe a little bit of a seasonal turn on this low. We kind of see that in this window. But at the same time, this market's not ready to go anywhere too fast to the upside just because of all those pieces in the puzzle for wheat.
Would you say this wheat market, we had the massive run up, all the war premium, we took it out, now we've come back a little bit. Do you feel like where we're at right now in all three complexes that this is more of a fair price for wheat here right now versus being, say extremely oversold, which it most likely probably was here a few months back, John?
Personally, I still think we got a little bit more room to get back up into some of these levels. Beans is $14 to $15 on new crop beans. We're on the lower end of that range right now. Corn probably should be in that 650 mode. Wheat probably should be back in the mid nines. Maybe poke at the 10 level. We've kind of discounted this whole Ukrainian situation. Those bushels are still not here, and they're not going to be available. Yeah, some is getting out, and in that regard, but it's still not the same impact that we've seen. I think some of it too, though, just the recession fears, and wheat's one of those crops that does kind of falls into that play. What is happening in terms of global demand? Is the money out there? You're seeing some of the instability out there in some of these countries right now because of food issues. I only expect that to kind of keep growing. That's still something that keeps me cautious in the markets in general here too. But right now, at least maybe given the supply picture, we probably should still be a little bit firmer. So that I definitely think that in corn and beans. But this wheat market is its own animal, and it really can move quickly. We gave it back a lot today, and it wouldn't shock me that if something came back a little bit more positive on the news tomorrow, we go right back to where we were in the overnight session.
Let's talk a little bit more about the inflation fears and the recession talk, because that's weighing on everything. A lot of global economic jitters are still out there. COVID numbers on the rise in China. We got more inflation data coming out this week here in the US. I think about it as well. I've seen some, chatter on social media about, certain things starting to be on sale at the grocery store, though. Gas prices coming down a little bit, but to me, it doesn't feel like this inflation bubble has burst yet, and I'm not sure when it will. What are your thoughts with just a lot of the jitters that we're seeing in the outside markets still here, John?
That is still something that's in front of things here. And it's not just here in the United States, it's globally. And, I kind of talked with a few people today about this too. If you just kind of watch social media, not, this is more my opinion than anything, but there might be something brewing in China. You had some issues with some banks and some run on the banks and money flow there. You've got some credit issues going. They fired up a stimulus package here just recently as well. Plus you're watching pork prices starting to skyrocket and move very quickly higher in that country. That could be a bit of a concern if China gets a cold globally in terms of the economic value. That's going to come into play across this commodity space. And then at the same time, we have a very difficult month in June. We saw a lot of these commodities come down very quickly. To me, it felt more like a technical profit-taking type move than a fundamental type move. Crude oil, it's sub $1 a barrel where it was in June. It just doesn't feel right given the supply picture. There's some things that still come into play. Is the commodity bubble over? Maybe the highs are in for it right now, but it doesn't mean we're on our way in a quick downslide here. So, yeah, we've got a little reprieve on some of these inflationary plays, but the situation is still there. Food items are still tight. Grains are still at multi-year tight supplies. We still got weather in front of us. So things aren't totally out of the woods yet, in my mind, in that regard. And that's something that could come into play. Obviously, we got that friendly jobs report on Friday, looking at the U.S. economy again. So that maybe brings a little bit of optimism on the buying side. But again, where are we going to be 5, 6, 7 weeks from now, or 2 months from now, 3 months from now? There's just still some things out there that make me a little bit nervous, just kind of seeing what's happening around my community in terms of some of these businesses and some of the struggles that they're starting to have.
Let's talk livestock, John. Cattle market was a clear winner today, kind of popping there around midday. Talk about what you saw there, because we mentioned this earlier too. Cattle were kind of just mixed to lower early on, and then something lit a match under both the fats of the feeders today. What'd you see in cattle, John?
Turned into a bit of a money flow day, realistically, and some technical buying. Now, let's go back to the commitment of traders report that came out. Cattle positions and cattle length were, in terms of live cattle market, were pretty thin. They typically don't go to the negative side in terms of those commitment of traders. So they were pushing it though down to that zero level, 10 to 14,000 contracts here on last week's commitment of traders report. So it might have been a spot where they needed a trigger, and it just turned into a technical one today. We had a fairly rough open with that strong grain market. Those feeder prices just kind of hung on to support. Cattle prices hung on to those bottom line support levels. And I think once those held, then some of the the green light got lit per se for some of these speculators to step back into a market. We talk about wheat, maybe not in the futures market, not connecting with the cash. I think that's a definite case that's happening here in these cattle markets. You've got the recession fears kind of trying to weigh over top of these markets, but then we got the reality of where we are in terms of cash prices. You're looking at the live cattle side, 137 south, but I'm hearing up to 150 plus in the northern tiers. We got a big discrepancy in cattle numbers based on those placements. Those northern cattle are tight, and these packers are looking for quality beef right now. With weights being down, they got a bid up for it. That's why we're seeing a record split between those two levels. Then on top of that, too, you just talk to cattle guys trying to pick up feeders right now. The value of feeders on the cash market are extremely high compared to where we are on the futures. So maybe we just got a little bit of a reality check here that, even with the recessionary fears, the tighter cattle numbers that are out there, overall, that this cattle market's undervalued and maybe should be trading firmer. So we'll have to see. Big move today, big outside day, as we call it, taking out the highs and the lows. And some of them were actually or bull reversals today. Now, if we see if we can get some follow through the next couple of days, again, watching what cash trade does will be key. But again, this cattle market just felt like it finally got a little bit of a wake-up call today, just from some money flow.
Now, on the flip side, the hog market last week, we've seen this hog market doing its best to really find some money flow, some good movement. But then today we kind of took a breather, took a pause a little bit. I know the July contract was up a little bit, but outside of that, August, that July contract getting set to go off the board. So here soon. So August, a little bit of a discrepancy there, a little bit of a premium. You look at the deferred months, lower there today. So on the flip side, you look at hogs. What stands out to you, John?
We left the end of the week last week. Sure felt like some of those hog contracts are about ready to just bust out. I mean, they set themselves up very nicely with the move on the board here in terms of Wednesday, Thursday, and the Friday's trade. So I was a little disappointed to not see that happen. Now, you just mentioned one thing that's going to be a big factor. July comes off on the 15th. So that's going to just keep the market fairly choppy as those positions start closing out here. Maybe that led to some of the selling pressure in some of those deferred months today. The other thing I'm kind of watching, we've got a very good cash market overall, but it's starting to seem like it wants to roll over a little bit here. Maybe the futures market might be starting to price in a bit of a top on the cash market. We'll have to see. The index didn't move up much last week. Again, it's been fairly steady the last handful of days, with it basically up and down movements in terms of its price. You can look at the direct cash trade. That was softer on the morning report today too. So that doesn't help out. So there's some things out there that maybe we're about ready to kind of roll this thing over. Staying cautious on saying that though, because again, those hog numbers are tight. You've got issues overseas, African swine fever in Germany, those pork prices in China, again, surging higher. We had a really good export week last week in terms of sales, or the previous week, and that came out on Friday's export sales report, as well as good shipment numbers. And China was in that report with a fairly good size amount of purchases. So there's a lot of mixed messages right now. I think all we need is hogs to maybe make one little move here, and then we could see some technical buying pop into it like we saw in the cattle market today. But again, just still, got to get that to happen. That still makes me just a little bit cautious, just because the market may be kind of running out of gas.
How about this dairy market? I know we've continued to see volatility there, John. I mean, we've come off the recent high, especially I look at milk, but what are your thoughts with dairy here as we enter into the middle of July right now? What are you seeing?
Kind of watching what's happening in that cheese trade right now. Things have really come down in terms of the value there. You're also just seeing some global competition. Global dairy prices continue to be pressured. Those milk market went sideways for quite a long time there, really working things between that $25 to $23 window. And with that being said, we kind of broke through that bottom end of the barrier, so the selling pressure kicked in very, very quickly. Now, finding some support around 21 bucks, that might hold us here. Looking at those charts, bounced off that last week. Now we need to see things stabilize in those outside markets. Again, when you get markets that consolidate as long as they are, sometimes those moves can be quick and abrupt when we break through those barriers. And I was fearful it was going to be the downside move that we got. So again, we'll have to keep watching what's going on the trade front, the global prices in terms of where we are competitively against them. Things are still fairly good there in that regard. And I think that keeps things supported here, at least in this $21 handle, at least on those front month futures. Again, still decent value historically for producers, so don't fall asleep on that and stay active.
John, we are out of time. Any final thoughts you have for us, real quick, here on the show today?
Now, this volatility is not going to go anywhere. Again, we're going to be a forecast by forecast in the grain market. We come back tonight and dry out the afternoon forecast after adding a little moisture this morning. We'll go right back and re-challenge those highs. Just stay active, stay with your targets, and when you hit them, make the sales and have no regrets about it. That's the thing. There's still good value out there. Take advantage of it in front when it hits your opportunities.
Well, John, I know as well, if producers need advice, they can reach out to you at Total Farm Marketing very easily. How can they get a hold of you?
Love chatting with me anytime. Give me a call at the office, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget about that website of ours, totalfarmmarketing.com. A lot of great information for producers out there. Plus, we have an app for your phone to go with it as well. Take advantage of that information.
John, always appreciate it, sir. Have a fantastic week, and we'll talk to you next Monday.
Sounds great. Have a good week.
And that's John Heinberg of Total Farm Marketing. I'm Jesse Allen. Thanks for joining us today here on Market Talk. Find us online, markettalkag.com. Have yourself a great afternoon.